Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Markets are mostly lower across the ag space this morning as we just continue to have a lack of fresh news and data as the federal government shutdown now has reached 2 full weeks. Many contracts are testing key support levels on the charts. Corn right now is down a penny, down 4 to 5 in the soybeans. Wheat prices are range from 1 to 4 lower. In the products, meal is a shining star here, sitting steady, maybe a couple ticks higher, while soybean oil prices are down about 50 points. U.S.-Chinese trade relations remain elevated as both sides have started imposing steep fees on each other's vessels that arrive at their respective ports. In addition, China has now placed sanctions on several U.S. subsidiaries of South Korean shipbuilding company Hanwha Ocean. Markets will nervously await any response from the Trump administration. Although no data from the USDA, a Reuters poll yesterday suggests corn harvest has reached 44% as of this past Sunday. That's down slightly from the 47% pace from a year ago. Soybean harvest is expected to have reached 58%. That's well below the 67% pace from a year ago, however, which was amongst the fastest harvest paces ever. Weather-wise, will remain mostly dry across the southeastern two-thirds of the Midwest through the end of this week. Scattered showers in the northwestern third. Rains are expected to eventually slide across the southern Midwest and into the eastern Corn Belt by this weekend, slowing harvest into the early part of next week. And temperatures do look to hold at above normal readings through the end of the month. In South America, monsoonal rains across some key growing areas of west central and northern areas a little bit slower than expected to arrive. However, daily chances for some scattered precipitation are expected for the balance of this week and into next week. Rains in Argentina have remained timely. In southern Brazil, remains in a wetter than normal pattern, something that could start to impact the quality of this year's wheat harvest as that is just getting underway. I suspect we'll get some trade data today in the form of export inspections. This data continues to be collected despite the federal government shutdown. Also tomorrow, expect data from NOPA crush data from September. Spot board crush margins have really kind of leveled off here in recent weeks around the 145 to 150 per bushel level. That is very close to its historical average. The EIA will also operate at a mostly normal pace, meaning we'll likely get our weekly ethanol production data on Thursday, delayed a day due to Columbus Day holiday yesterday. D's corn did slip to a 7-week low overnight. The next support is at the 403.5 level. I think there's ongoing harvest pressure starting to strain storage capacity and is likely weighing on prices. Also, lack of export data isn't helping. Strong export demand is something that has helped keep prices elevated, propped up above this $4 level. New two-week low for November beans overnight, however, continue to hold just above that $10 level. Despite the weakness, December bean oil that has so far held above last week's low while rebounding back above that 50-cent level. D's meal just kind of consolidating very near 275 right now, above the contract low at 270. New contract low in wheat in December, Kansas City and Chicago. Both contracts also fell to its lowest level in 5 years on both the spot weekly and monthly charts. Speculative traders remain a healthy short in the market, and they just continue to roll these positions forward while harvesting the wide carries here in the market. Waiting to see if Jordan makes any purchases on their recent 120,000 metric ton tender. Thanks for listening, everyone, and have a great day.